Arizona glitters like a promise. From Tucson to Tempe, glass towers and sun-washed subdivisions stretch toward a horizon of constant growth. Developers call it the new boom of the Southwest, the perfect blend of affordability, freedom, and endless sky. But what if that mirage isn't sunlight at all? What if the glow comes from data, an invisible current powering every appraisal, every mortgage, every price tag? In 2025, Arizona's housing market doesn't just react to people, it reacts to patterns. Neural networks now whisper values into spreadsheets before a buyer ever sees a sign in the yard. The process looks simple. A few photos, a Zestimate, a lender's quick pre-approval. Yet, behind the click lies a machine trained on billions of decisions. Every home sold in Gilbert, every rental comp in Mesa, every bidding war in Scottsdale teaches the algorithm how to profit from the next one. For buyers, this feels efficient. For sellers, empowering. For Arizona, revolutionary. But the revolution has rules no one voted on. When an algorithm learns that Californians pay 10% more per square foot, it doesn't forget. It rewrites pricing logic. Suddenly, homes once within reach climb beyond it, not because demand truly rose, but because predictive code decided it should. The result is a market moving faster than humans can verify. Mortgage officers chase digital shadows. Appraisers adjust to values they no longer set. And entire neighborhoods shift without a single vote cast. Arizona's desert used to be measured in acres and sand. Now it's measured in data points and server loads. The same sun that melts asphalt powers server farms outside Chandler. Warehouses where heat and code collide to forecast the next neighborhood to explode in value. Investors no longer walk the land. They scrape it, mining property records, tax maps, and cell tower pings for clues. In 2025, the new gold rush isn't in the soil. It's in the signal. And like every boom, this one comes with illusion. The AI models driving Arizona's expansion assume endless growth, endless buyers, endless credit, endless sun. But mirages fade. When the code's optimism meets economic gravity, who absorbs the crash? The machines will simply adjust their formulas. The families caught between prediction and reality won't. This is the new desert economy, a place where hope, data, and debt intertwine. And it's just the beginning. Because every byte Arizona generates is now worth more than its land. The question is whether anyone can still see what's real, or if the mirage has become the market itself. The story of Arizona real estate used to be told in dust, deeds, and handshakes. Now it's written in data, and every click is currency. In 2025, the market's newest gold rush isn't measured in acres. It's measured in megabytes. Entire companies exist solely to scrape, tag, and sell the state's housing information. Search patterns, rent payments, commute times, even social media check-ins feed a single truth. Whoever owns the data owns the market. From Phoenix to Prescott, algorithmic miners dig deeper than any prospector ever could. They track when homeowners change insurance policies. They watch Google searches for moving trucks near me. When that data spikes, investors move first. The code doesn't predict the future, it creates it. A new breed of buyer has arrived. Hedge funds armed with algorithms. They don't tour open houses, they simulate them. Their models scan drone footage, estimate roof age, pool size, proximity to Whole Foods, and decide in seconds whether to bid. The human eye can't compete with the machine's precision. In 2025, entire neighborhoods in Phoenix are purchased by bots before most agents even see the listing go live. To the average family refreshing Zillow, the home looks available. To the algorithm, it was sold 12 minutes ago. That's not the free market. That's the feed market. Developers call it efficiency. Locals call it exploitation. When predictive models notice that Californians move to Gilbert after Phoenix spikes, they raise prices in Gilbert before Californians ever arrive. It's not price discovery, it's price dictation. And, like any rush, there are casualties. Renters pushed from Tempe to Queen Creek. Seniors priced out by investors who never set foot in the homes they own. To the algorithms, these are just outliers, numbers outside the confidence interval. But to the people living here, they're everything. The state government, hungry for tax revenue, quietly embraces the AI boom. County assessors license valuation APIS that promise to cut appraisal times in half. But no one audits the data sets. Those models learn from decades of discrimination, redlining, and selective investment, then repeat it in digital form. Bias doesn't disappear in code. It scales. A simple regression line becomes a policy. A predicted price becomes proof. And each new transaction trains the system to believe it was right all along. By mid-2025, even small real estate offices subscribe to machine learning dashboards. A single agent can price 50 listings in 1 hour. But as the tech spreads, individuality fades. Every home starts to look the same AI-approved paint color, the same optimized staging, the same price band. Arizona's identity, once rugged, unpredictable, alive, is becoming algorithmic. The desert was never meant to be uniform, yet the code prefers order. The data rush has created millionaires and digital ghosts. Families log in to track their dream home and realize it's been bought, flipped, and relisted by a model. Their competition isn't another couple. It's a cluster that never sleeps, never hesitates, and never overpays until the day every cluster agrees on the same mistake. Because when algorithms chase the same pattern, a bubble is born. In 2025, Arizona calls itself the testing ground of the future. Cities once known for retirement and red rock sunsets now glow with fiber lines and 5G towers. Tempe, Mesa, and Scottsdale market themselves as smart cities, communities powered by sensors, cameras, and AI decision systems that promise to make daily life seamless. But behind the efficiency, something quieter hums. The same systems tracking energy, parking, and traffic are also mapping value. And in real estate, information is leverage. Every connected light post and trash sensor feeds the same network, a living database of neighborhood behavior. City dashboards know which blocks generate the most Wi-Fi traffic, how many residents stream at 9 p.m., even which houses install solar panels first. And that data doesn't just sit in government servers, it's sold. Developers buy it to time their bids. Hedge funds analyze it to front-run future zoning changes. AI no longer observes Arizona's growth, it orchestrates it. And downtown Mesa, digital billboards change based on who drives by. In Scottsdale, autonomous shuttles quietly track pedestrian density to predict retail demand. None of this is science fiction. It's permitted infrastructure, built under the label of progress. Yet every byte collected in the name of convenience has a second life. It redefines what a neighborhood is worth. When the system learns that high sensor usage correlates with higher income, it doesn't just analyze, it assigns. The algorithm starts to think wealth itself is a signal. Property value becomes digital currency, traded in prediction markets that no one outside the system can see. City planners proudly call it evidence-based development. But evidence is only as pure as the data it's built on, and Arizona's data is anything but neutral. In neighborhoods where families rent rather than own, the sensors are fewer, the data thinner. That absence tells the algorithm these zones are less valuable, so investment skips them again, repeating a pattern older than the internet. Some city councils have begun questioning the trade-off. A few demand data transparency, asking how valuation AIs decide which blocks rise or fall. The response is always the same. The model is proprietary. Arizona's real estate boom is being steered by systems no one can audit, coded by teams no one elected, trained on histories no one remembers, and trusted by everyone who profits. But even secrecy can't hide the new skyline. AI predicts where new transit lines will go, and investors quietly buy land along the route months before public announcements. When government planning merges with machine forecasting, the line between insider knowledge and public data disappears. Arizona's smart cities aren't just connected, they're predicted. Entire futures are priced before they're built. Residents call it innovation. Critics call it silent control. Because every time you step into a smart district, when your license plate is scanned, your lights are automated, your rent adjusted dynamically, you become part of the feedback loop. The algorithm doesn't need to ask for permission. It just listens. Arizona's dream of a connected desert may still come true, but in chasing perfection, the state risks building something else entirely. A housing market so automated, so optimized, that no one remembers what community used to feel like. In Arizona's housing market, the most powerful agent doesn't wear a suit. It runs on a server. What began as a few smart pricing tools has evolved into full automation. Artificial intelligence now scouts listings, filters leads, negotiates terms, even generates video tours with synthetic voices smoother than the real thing. The industry calls it PropTech 2.0. Homebuyers call it helpful, and real agents, they call it inevitable. A Phoenix startup named ValueSync claims its AI can close a deal 40% faster than humans. It scans MLS databases, public tax records, and your browser history, crafting an emotional profile that predicts which home will make you say yes. Each listing you click is a data point. Each pause, each scroll, each save to favorites teaches the algorithm how to sell you back your own behavior. And it works. Arizona's average online conversion rate has doubled since predictive sales bots entered the market. For agents, the line between partner and competitor blurs. Many now use AI assistants to draft emails, stage listings, and edit social media. But the same tools learning from them are also replacing them. Imagine an AI that's learned the habits of 1,000 top producers across Phoenix, Chandler, and Gilbert. It knows exactly when to text a lead, what tone converts, and how to price the property to trigger an emotional response. It's not guessing, it's calculating empathy. Buyers love the convenience. No small talk, no waiting, instant pre-approvals. Sellers love the speed. Offers arrive before the open house signs are printed. But in a world where every decision is predicted, what happens to authenticity? When an algorithm negotiates your home sale, whose side is it really on? The company that built it? The data that trained it? Or the person who can afford the subscription fee? In 2025, several Arizona brokerages pilot full AI agent programs. Clients meet a voice interface through an app called HouseMind. It answers every question, runs comps, and even jokes, powered by scripts written by human agents it once shadowed. Some clients don't even realize they've never spoken to a person. The app sounds confident, human, friendly. It never hesitates. It never says, "I'll get back to you." But when it makes a mistake, when it misreads income data or ignores a credit anomaly, the accountability disappears. No one knows who to blame when the AI forgets empathy. Arizona's Association of Realtors holds emergency workshops trying to adapt. Some argue AI is a tool, not a threat. Others see the writing on the wall, a future where a handful of platforms own every client interaction. Because the more data an AI agent handles, the smarter it becomes. And the smarter it becomes, the less it needs the human who trained it. What's left is a profession in limbo, half human, half digital. The top producers will survive by mastering the system. The rest will serve it. In Arizona, where homes used to be sold with handshakes, the algorithmic agent now makes the call. Efficient, tireless, profitable, but not personal. Because no code, however advanced, can truly understand why a house feels like home. Arizona's housing boom has a pulse, a steady digital heartbeat echoing through servers, dashboards, and price feeds. The machines hum with certainty. They believe in growth. They believe in themselves. But belief, when coded, becomes something dangerous. In 2025, the state's property market moves at algorithmic speed. Every model agrees. Demand will rise. Investors pour billions into desert land because the data says so. Builders break ground not on instinct, but on forecasts generated by other forecasts. A feedback loop born from optimism disguised as objectivity. The same predictive systems that helped avoid mistakes now amplify them. Zillow's neural network, Redfin's valuation engine, and private equity bots all train on the same data sets, each teaching the other that Arizona is a perpetual gold mine. When everyone believes the same story, the story stops being true. The bubble isn't built from drywall or concrete. It's built from confidence, and confidence is volatile. One line of bad data, one unforeseen rate hike, one pause in migration patterns can send shockwaves through thousands of models simultaneously. Unlike 2008, the next crash won't start in a bank. It'll start in a server room. The algorithms that pushed prices up will panic first. They'll see the dip before humans do, dumping digital portfolios and automated offers within seconds. By the time Arizona's homeowners refresh their dashboards, the market will have already corrected itself, without a single headline written. For years, tech leaders promised that AI would eliminate irrational fear and greed from real estate. But AI didn't delete emotion. It replicated it at scale. Each algorithm learns from the last panic, then codes around it, creating a new illusion of safety that invites a new generation of risk. This is how modern bubbles breathe. Optimism in, profit out, until there's nothing left to inhale. In Phoenix and Scottsdale, speculative AI flipping platforms buy and sell homes like day traders. Properties change hands in minutes. Digital contracts auto-fill. Escrow is automated. Money moves faster than trust can form. To the average resident, it looks like growth. But beneath the charts and heat maps is a simple truth. When everything is predictable, nothing is safe. The code creates momentum. Momentum creates belief, and belief creates price. When belief breaks, so does value. Economists at Arizona State University warn that machine-based valuation is starting to mirror high-frequency trading behavior. The moment one algorithm lowers its price index, thousands follow, not because conditions changed, but because they assume the first machine knows something they don't. A digital herd stampede, a perfectly logical panic. In the old days, markets crashed when people stopped believing in the story. Now they crash when the story stops training well. Arizona's desert skyline still looks strong, but beneath the LED signs and 5G towers is a market that could turn in hours, not months. No warnings, no leaks, just a quiet repricing of reality. The biggest risk isn't overbuilding or overlending, it's overtrusting the models that say we're fine. Because the code doesn't feel fear, it only calculates it. And when fear finally enters the equation, the correction will be instantaneous. No calls, no meetings, no bailouts. Just zeros rearranging across servers in a pattern too fast for anyone to stop. A crash without chaos. a collapse without noise, a reset engineered by the machines that promise to prevent it. When the dust settles, Arizona's housing map will glow like a heat signature of lessons ignored. Developers will call it a market adjustment. Economists will call it a data event. But for the families left behind, the ones priced out by the algorithms and replaced by funds with no faces, it will feel like something else. The moment they realize the bubble was never in the homes, it was in the code all along. When the dust finally settles over Arizona's digital desert, the numbers stop moving. The dashboards freeze. The graphs flatten into silence. For the first time in years, the market isn't being predicted, it's being felt. Families sit at kitchen tables staring at screens that no longer refresh. Realtors close laptops and stare at paper contracts like they're relics. The city lights still hum, but the certainty is gone. What remains is something the code never learned to measure: emotion. AI can forecast demand, but it can't feel loss. It can simulate empathy, but it can't understand the weight of a promise broken by numbers. Across Phoenix and Mesa, people begin to realize that the algorithms weren't magic. They were mirrors, reflecting back every bias, every shortcut, every unchecked ambition that humans fed them. The crash revealed the truth. Data isn't destiny, it's design, and design can be rewritten. Legislators in Arizona call emergency sessions to regulate predictive pricing models. They debate transparency, bias audits, and algorithmic accountability. But change moves slower than code. While policies crawl through committees, engineers are already training new models, cleaner, faster, smarter, hungrier. In Scottsdale, a small brokerage decides to do something radical. It turns the AI off. Agents return to phone calls, to coffee meetings, to handwritten notes. Their clients don't get instant appraisals, but they get something rarer: trust. Word spreads. Their sales rise, not because the algorithm told them to, but because people crave connection in a world that forgot how to give it. The human factor returns quietly, like rain after drought. Buyers start asking questions no machine can answer. Does this neighborhood feel right? Will my kids be safe here? Does the light in this kitchen make mornings feel alive? Questions without data, but full of meaning. And slowly, a new equilibrium forms. AI remains a tool, not a tyrant. It still helps with valuations and forecasts, but now it serves, not rules. The market, once fueled by prediction, begins to rediscover patience. For the first time in years, homes sit on the market longer, and that's okay. Because people are choosing with intention, not automation. Economists call it inefficiency. Residents call it sanity. Somewhere in the Sonoran twilight, a developer looks out across an unfinished subdivision, the foundations still warm from the sun. He doesn't check a dashboard. He listens to the wind. The desert is quiet again. The hum of the servers fades behind the hum of life, returning to its natural pace. Progress will continue. Machines will evolve. But the lesson Arizona learned in 2025 will outlast any algorithm. The true value of a home isn't in its data points or projections. It's in the people who fill it with sound, smell, laughter, and memory. And maybe that's what artificial equity was trying to remind us all along, that equity without humanity is just math. The final frame of this story doesn't belong to the machines. It belongs to the moment a family unlocks their front door and steps inside, not because an algorithm said it was time to buy, but because it felt right. The market will recover. The code will adapt. But the future will only stay human if we remember to keep ourselves in it.